Hello. Hello. Oh, I can't hear.
Excuse me, Will, can you hear us?
I sure can.
Can you see my screen right here, these PowerPoints?
I sure do.
Awesome. Thank you very much. Folks are starting to file in. We're going to start around 5:30 on the dot. So we appreciate you joining us.
Thank you for having me.
Hello, everyone on Zoom. We are gearing up to get started pretty shortly. Just going to wait for a few more people to connect. Everyone on Zoom, we're about to start in roughly 2 minutes. Can you guys hear us loud and clear?
Yes.
Awesome. Thank you.
Yes.
Can hear.
Can hear you.
Yes.
Yes.
Thank you.
Yes.
All right, everyone, we're looking to get started. Welcome. My name is Coleman. Joining us today, we have our VP of Lending from City of Boston Credit Union, Bob McCauley. We have Tegan, who's going to cover the realtor process, and we have Katie Frazier, who's going to cover the closing process. At the end of this, there will be a contact information slide. So if anybody has any questions that we can't get to today, we'll absolutely reach out to you tomorrow, and everybody will be taken care of. So thank you to all 60 of you for joining us. I am going to just remind everyone, if you're not speaking or asking a question, please stay on mute. I will periodically double check and mute everybody, but we're going to get into it. So thank you for joining. Also, we are recording this, so if anybody would like the recording afterwards, I'm happy to send it over to you. So thank you. Take it away, Bob.
Thank you. My name is Bob McCauley. As Coleman said, VP of Lending at the Credit Union. Just want to acknowledge a few other people. We have our CEO here, Neil Gordon, who's been instrumental in putting this together, and our branch manager, Carrie Baskowitz, who gave us her office to use. So basically, just a quick points on what we hope to accomplish here. One thing, this is not a quote home buyer education course, which sometimes you hear about, that you're required to take if you want to participate in programs. This is a informational forum, give and take and all that. It's not one of those courses, but hopefully you'll walk away with here knowing a little bit more about the whole home buying process, particularly if you're a first-time home buyer. Just a few words about the credit union. I mean, we've been around for over 100 years, founded in 1915. Anybody, you don't have to work for the city. You don't have to live in the city. Anybody who lives or works Suffolk, Norfolk, or Middlesex County is eligible to be in the credit union and avail themselves of all our products and services. So most everybody here, I'm assuming, is a first-time home buyer. And the good part about that is a first-time home buyer is everybody's friend in the process. And the reason for that is basically, you know how real estate things work. You buy a house from somebody, they're selling their house to you, and then they're buying the other house and so on. And all these transactions are interlinked. And so if somebody though, has to not have a house, or if one person fails to do what they need to do, the whole process jams up. And so that you're kind of the key person in it, but there's also a couple other reasons. I mean, lenders are very highly regulated, and we're reviewed, justifiably so, on how we support our communities. And one of the big ways we support our communities is helping people get houses. And so that's another reason why being a first-time home buyer has to be. And because of that, there are a lot of programs out there just for first-time home buyers. I mean, I won't go into all the details, but some of them will be like discounts on rates, discounts on fees. more flexible underwriting. And it's there because basically there's obviously a need to get people houses, and buying the first house is always the toughest house you can buy. I mean, you know, you're going to script and save, you're going to probably end up paying a mortgage payment a little more than you'd hope for. I mean, you're going to probably drain your savings a little more than you intended to. But, you know, once you buy that first house, I mean, then as I say, you're a player in the game. And so that's why there are a lot of programs out there, I mean, to help the first-time home buyer. So, I mean, a couple other things we're looking at is what you really need to think about is you have to have a plan. And sometimes the plan takes a little time. And what I mean by that is you got to get your ducks in a row. I mean, concentrate on certain things that really matter to you. And it's like, what kind of house are you looking for? Are you looking for a condominium? Are you looking for single-family home? Or do you want to get a multi-family home and basically hope that maybe some of the rent from the other units might help you support it? And generally, so whatever you decide, that's up to you. But the first step generally in our process from a lending perspective is to come in and get pre-qualified or pre-approved. And you hear a lot about that, oh, you need to be pre-approved versus pre-qualified. What's the difference? Simply, the pre-qualification is a much more simple review. I mean, we look at your credit, we look at your income, and we'll work some numbers and we'll say, you're credit qualified for mortgage approximately this amount based on a number of assumptions we make. Pre-approval is a higher standard. We're looking at your assets, son, because, you know, you may only be able to afford like a $200,000 house. But if you are fortunate, like inherit money, and you have like $150,000 in the bank, then you can get a house theoretically for $350,000. Whereas that other person who gets also pre-qualified for $200,000, he might only have $10,000 in the bank, and so maybe he only gets a $210,000 house. However, if you fall into that latter category, don't feel bad, because there are programs out there for people. Because we live in an expensive city and an expensive state, and saving money towards that is very difficult these days. I mean, I don't tell anybody that. And there are programs out there that we participate in that help you qualify applicants with down payment assistance and closing cost assistance, so that there are a lot of parties who are trying to work to make this thing happen for everybody. So the first step, once you get pre-qualified, is go out and house hunt. And if you find a house you like, you make an offer, and it gets accepted. Now, I'm not going to go too deeply into that. I think Keegan knows a lot more about that part of the process from a realtor perspective. But your offer is accepted, and the next step generally is what they call the home inspection. Basically, that's just to check the functionality of the house. It has nothing to do really with the value. That's a real estate appraisal, which comes a bit later. What your inspection does, it might tell you that, you know, in 5 years, you're going to have that roof replaced. The electrical needs an overhead. You really don't have enough electrical capacity. Things like that. I mean, what can you do with that information? You can renegotiate the price. You can put a stipulation in that the leaky water heater gets fixed before closing, and a number of things. Once you get through that, then you get to the purchase and sale. That's when you sign the legally binding contract, and that you're going to buy that house. And you'll hear a lot about, well, what they call clean offers with no contingencies. I mean, that might be a passing fad, but generally there's always contingencies. The biggest one you should worry about is the mortgage contingency. That means you agree that you will apply for a mortgage in a timely fashion. And if you can't get that mortgage by a certain point, you'll tell them, I can't get a mortgage. They'll give you your deposit back. I mean, that's a key thing, because nobody wants to make a deposit and then not get your mortgage and not get your deposit back. Once you do that, the mortgage application process these days takes about, I would say on the purchase now, 5 to 6 weeks. I mean, it had been a little less, 4 to 5 weeks, but it's busy now. I mean, and there are a lot of pieces beyond anybody's control, beyond the realtor's control, beyond the closing attorneys, on the lenders. I mean, you have appraisers, for instance. They can only appraise so many houses in one day. I mean, and it's not just taking a drive-by, take a few pictures. Yeah, that house is worth $400,000. It's a detailed thing that they have to go through. So if you're timelining out, particularly if you have if you're in a rental situation, you have a lease that's coming up. That's why I say have a plan and plan ahead, because nobody wants to have to extend a lease for a year in a tight rental market when you could be in a house in 6 months and then have to try to get out of a lease. It's not a fun thing. Okay. When you apply for the mortgage, and that's kind of my main area, documentation is critical. And this is some of the things you can do now, is take copies of all your main financial documents, notably your tax returns. I mean, tax returns, W-2s, keep recent pay stubs, because a lot of times I get people in applications who said they weren't even intended, they didn't think they could buy a house. All of a sudden they saw one that was interested, and they found out that they actually could get a mortgage for that house. And then it becomes this mad dash about trying to find 2 years tax returns, your pay stub, or where's that retirement statement they only send once a year? That's why I said have a plan. Even if you're not thinking about buying now, but maybe in 6 months, a lot of that stuff is a couple years in the making. Put it aside. So when you walk in to apply for a loan, you're ready. I mean, because time is of the essence. Unfortunately, they say it's more of a seller's market, but I mean, that can change. But right now, I mean, have the documentation. It makes the process go so much smoother. And one of the things, like when you do a purchase and sale, you set deadlines. It's like you'll get a mortgage commitment by X day, you will close by Y day. And I mean, if you are spending time chasing down little pieces of paper that you might have had in the shoebox or whatever, file cabinet, I mean, it's not going to really help anybody. Some of the things they'll do is, they'll give you disclosures up front. Look them over carefully. When we get to a part about having an attorney, for instance, and Katie can go over it, I mean, that's a good thing. I mean, to have the advice of legal counsel. When you see something that, and even though your loan officer will explain it, sometimes you want a third party to look it over. I mean, we're talking a lot of money here. I mean, some people say like buying your first home is the biggest decision, except for maybe getting married. And as they say, when you think about the money involved, it's true. What will then happen? The other key point is once you get by that initial period when you're pre-qualified, you apply, is the appraisal. And that's one thing that's kind of all beyond our control. I mean, when you get into a market where you hear people paying over asking price, I mean, it is what it is. I mean, lenders are constrained to lend based on what an appraiser says the property is worth. If somebody wants to pay $20,000, that's fine. It's a free country, but they might have to come up with that additional funds themselves or other creative ways. Once that happens, you get basically the mortgage commitment. When you get the mortgage commitment, then you have a realistic idea that this is going to happen and this is going to happen soon. And it basically says, we've approved your loan. This is how much we're lending you. This is how much your interest rate is. And this is what your payments will be. Shortly thereafter, they'll give you your final disclosures. And the key thing about that, it'll repeat those things. Plus, it'll also tell you, this is the amount of money you need to bring to the closing. I mean, so, you probably have made a small down deposit when you sign your offer, and then another small deposit when you sign your purchase and sale. The balance of your down payment, if any, and your closing costs will be do that. And so, it's kind of like, that's like I say, you get a plan ahead. Nobody wants to be like, you're closing at 10 and you're down over there at the teller line getting a couple of treasurer's checks and money orders to come up with the difference. I won't go much over the closing because we have somebody here who actually does closings. But basically, from my own experience, it's kind of like sign this, sign this, sign this, sign this, and here's the keys. I mean, some people, I've had closings where some people really have insisted upon going over every document and more power to them. But, most of the stuff by this time you've already seen in a couple formats. So that's it on the lending side. I have a few other things to go over. I mean, because there was a few questions. A lot of people ask, kind of keep things in the spot. Like, biggest question I get these days is, I'm not going to get into it. One of the ones is, should you have an attorney? As they say, Katie can go over the legal stuff. All I got to say is, we don't require it, but every purchase transaction I've ever seen in the last 10 years people have attorneys. And, you know, given the investment and the obligation you're undertaking, the fact, having that kind of representation is probably a thing. I mean, I don't get into what they charge. It's an individual decision. Other key questions I always get about our credit scores. First of all, don't get too worked up about, oh, somebody paid my credit, pulled my credit, and so it's going to make my score down. It might impact you a point or two, temporary, and then it goes away. And then the real key thing is, you know, the only place where that impacts you is if you go into every lender up and down the street, which you can do to see if you get, and they're all pulling the credit, yeah, we'll have a bit of an impact, and you might have to just explain to somebody, whoever you ultimately do the loan for, that you're just shopping around. But it doesn't have that big of an impact as far as what is a good credit score. You know, if you're at 660, yeah, you're in the ballgame. It's considered a middling score, but a lot of the programs that out there that do have set credit score minimums at 660, you're fine. You can go lower, and you can actually go as low as 620 in some programs, but that comes at a cost. I mean, you could incur additional fees. You could incur higher rates. If you're making a low down payment mortgage and involves private mortgage insurance, you're going to pay a higher private mortgage premium based on your credit score. So that's one thing everybody can pretty well control. Like I say, I mean, you know, just take care of business. I mean, pay your bills on time. It's like being late on a $25 Kohl's card is going to croak you as much as being late on like a $50,000 loan. I mean, it's a late payment, and you know that's the reality. I see as many people on the little stuff have their credit derailed as on the big stuff, and it makes absolutely no sense to me that you'll let something go 90 days, like I say, that overall might have cost you $60 cumulative. So, I mean, that's basically what I have. As they say, I'm going to turn it over to Tegan now to go on some from the real estate agent perspective of the process. Oh, sure. Okay, thank you. Oh, thanks. Just one other thing for a bit of a plug for us. As I say, there are a lot of special programs out there for first-time homebuyers. Right now, for all purchases, we're offering a discount on the rate. Whatever your rate would normally be, would be an 8+. Plus, for first-time homebuyers, you already start at an 8 below that. A couple other things just to note for those of you who live in the city or are looking to buy in the city. We do participate in the City of Boston's financial assistance program. That's a good program. It gives you assistance towards a portion of your closing costs and down payment. And they've come out with a new one that some of you may have heard called One Plus Boston, which also involves like further interest rate subsidies. So I mean, I've seen people now getting loans under this program under 2%. I mean, which is, that it's just another way of trying to, people of average means try to stretch your house buying ability.
Thank you, Bob. Real quick, Tegan, I'm going to switch slides.
Okay. So my packet is how to choose the right agent. Hi, everyone on Zoom. I'm going to be glancing at this screen to see my notes. So if I'm squinting, that's why. But I'm Tegan Gata. I'm with eXp Realty. I have a small team there, about 15 agents, 15, 20 agents, and we're known as AHA Homes. So you'll see I put a little book in your blue lunch bag that we handed out. But I'm going to go over how to choose the right agent. There's actually many different kinds of agents and kind of different size brokerages. So I'm going to run through and just give some tips on what you should be looking out for. Has anyone here, raise your hand, ever purchased a house before? Are you all first time? The one? Okay, good. So you've seen the process, and some of this you might be familiar with. So which agent is right for you? There are many factors. I think first factor is location. You might be looking in a specific town. You might be looking at a certain state. You might be moving to a new state. So location is a huge factor And you want to look at the agent that you're potentially interviewing, whether you're buying or selling, and see their sales record in that town or city. If you choose an agent who's a specialist in that town, they might have some listings already and they might have pocket listings. So as I talk about pocket listings, these are also generally called off-market deals, but they're properties that haven't yet made it to the MLS, which is basically the public listing service that we have. Because we're in such a competitive market, having access to these off-market deals is really key for buyers because it eliminates a lot of competition. There's not as many eyes on the property, so you might be able to go in, and I'm sure a lot of you have heard that recently properties are selling for like $100,000, $200,000 over, just because there's so much activity. So trying to limit that will really help you as a buyer. So you can stay on this one for a minute. Another question to ask is, does that agent have a team? It can be very beneficial to work with a team only because you have so much more coverage. So this is really great also for buyers who might not be looking at a specific town. You might be looking kind of more general, and having a team behind you gives you access to different agents who probably have different local knowledge. So for example, my team, because we're large enough, we can cover multiple states. So we're licensed in Florida, Massachusetts, Illinois, Connecticut, Rhode Island, and New Hampshire. So that's great for a lot of buyers here in Massachusetts on the North Shore. A lot of buyers also look in New Hampshire. So if you're working with one agent who's only licensed here in Massachusetts, you might have to then start shopping with a New Hampshire agent. It just gets more people kind of in the mix. So having someone that can know what's going on in your search and kind of bring you to different areas is always important. And then another question to ask is, where is the broker's office located? So you want to know where the team is, where their office is, and where they really have a lot of strength. Other factors to consider, there are first-time homebuyer specialists, so agents that work more specifically with first-time homebuyers. They probably have a lot of resources and material to give you to kind of aid you through that process. Some agents are a little bit more investor friendly, so they're used to looking at numbers, kind of crunching numbers, looking at properties that might need improvements and where you can improve or different zoning. And then there's listing and buyers agents. So there are agents that specifically work with buyers, and some agents focus on sales or listings. So these are all questions to ask as you're interviewing different agents or looking at different agents. Yeah. So as you're looking and interviewing agents, looking at their skills and certifications is also very important. So a good question is to determine whether or not your agent is a broker or just a regular agent. So agent is works under a broker. So the broker is the person, they have a little bit more experience, they've done additional testing, and they actually have an office location and most likely have a team below them. A broker just has more years in the game, but it's good to know what capabilities your agent does have. Do they practice in other states, as I mentioned before, and do they have other licenses? So to be an agent, to be a general contractor, really anyone in trades, plumbers, electricians, you do have to do certain education and take a test. And then you have to stay up to date on continuing education and other things. So if you're looking at a house that maybe needs some work, if you're looking to do a fix and a flip, it might be beneficial to also work with an agent who has other licenses, for example, their GC license. What does their education and support look like? So are they working with a mentor? Have they worked with a mentor in the past? Are they a part of a coaching program? Then you know they have a lot of support and they have a lot of people helping them. It's really important in this industry, especially in this market where everything is so competitive. Are they involved in their local community? So once again, if you're really trying to narrow in on one specific town or city, it's definitely beneficial to have someone that has the community's ear, especially if you're looking to do more projects and zoning work, knowing the local attorneys, anyone on the zoning board, people that know the laws and are familiar. There's other leadership groups as well that an agent can be a part of. So BNI, the Boston Chamber, all community-based organizations where they can expand their network and have bigger access to deals and a larger pipeline. And do they have any other designations? Many agents on my team are licensed as new construction specialists. So they've done education online, passed a test. Working in new construction is a little different than just your regular home buying process because there's so many steps with getting paperwork sign-offs and things like that. So having someone that is experienced in that field is very important. And then, so you want to do a search on your agent. So obviously now everything is so tech-based and we have so much access to information online. You're going to want to do a search. Is that agent searchable? Do they have a website? Do they have online reviews? Are there past sales online? If you go to Zillow, you should really be able to find most agents. If they don't have a profile on Zillow, that's probably a red flag. Newer agents, younger agents, they probably are a little bit more tech savvy. Some of the old school brokers and agents, sometimes they're not as heavy with online marketing, but online is just everything right now. You know, we have such a large database online. There's so many properties online. You really want someone who's able to tap into those networks and find you deals that other agents aren't finding. And then online reviews. So I included one of mine. Zillow is another great place to see reviews of your agent. So I touched on this earlier. Look for an agent potentially or a team that could provide additional services. You're looking to do a little work on the property. You might want someone who has a tie to construction company or those licenses. If you're selling, you might need staging help and of course financing, which we just spoke about. And then once you select the right realtor for you, what should that realtor do? Of course, they should put you on a search. So really you should be getting updates every few days from different sites like the MLS and LoopNet. They should be hopefully reaching out to other agents, finding you those pocket listings or off-market deals so you can see a different variety of what everyone else is seeing on Zillow. You want an agent that's going to attend showings and open houses with you. If you're looking at a ton of houses, they might not be able to get to every open house, but once you find a property that you're interested in, they should definitely go ahead and walk through with you and make sure that everything looks good. Once you find a property that you're interested in writing an offer for, of course, they're going to write you an offer, which I believe Katie is going to cover and potentially hand out an example. Right now, it's so competitive, so you want an agent that is really creative in writing these offers. And there's many ways to do that. And of course, after that offer is accepted, they're going to help you navigate the deal. So connecting you to the right resources, whether that be an attorney like Katie, or if there's anything else that you need some help with construction, they should connect you to the right people. This also includes home inspectors because that will come up during the process. And yeah.
Who you pay it in?
How do you pay the realtor?
Yeah.
So the seller typically pays the realtor. So as the buyer, you really don't have to be too concerned about that. More so, you would be concerned about closing costs, which Katie, I believe, is going to cover. Yep. So really, nothing that you guys have to worry about. And then how your realtor can determine the price. So for those of you on Zoom, if you're looking at this slideshow, I think you should be able to click actually on the CMA and that should bring you to a live version of one. I'm not sure if that will work for you guys.
It might be tough broadcasting it live.
Oh, okay. If not, please feel free to follow up with me. I'm happy to show you some examples. Typically, I include about 6 to 8 comps in my CMA. So this is just local comparative analysis of the property that you're potentially interested in. And this is a great way too, if you ever need to sell a property, you would definitely want to have a CMA done. But you're just going to look at the past sales in the past 6 months, the size of houses. So if you're looking at a 3-bedroom house, you probably want to look at other 3-bedroom houses that have sold. And then you want to look at different special features. So garage spaces are big in this area, pool, the size of the lot, maybe the property has an in-law. But you want to pick the best comps to really determine what the best price is. Because the market is so competitive right now, you might have to just go over asking if they are getting a lot of offers. So right now, you have to know that you're going to go into these transactions and you might have to increase the price of it. I think that's it for me.
Thank you, Tegan.
I'll hand it over to Kate. Yeah, does anyone have any questions right now?
That was a question. Do you prefer questions at the end or during your
I'm happy to
presentation?
take any right now if anyone has.
I have one, but I think it was one for the
Sure.
credit union.
Yes.
You did mention a credit score, that was helpful. Should we be completely debt-free
No,
in order to,
I mean, to be completely debt-free might actually hurt if you don't have much of a credit history. I mean, it depends on how you mean debt-free.
so, well, what I would mean is maybe, college loans
Right.
or a car
Right.
loan.
Okay.
That's,
Right, there's no real answer on that. I mean, having those loans and handling them responsibly gives you a higher credit score.
right,
I mean, you can have too much debt and where that kind of weighs you down, and not so much on the credit score. It just, they look at what they call the debt to income ratio and all your
Right.
obligations, including your proposed mortgage payment. And if you have too much debt, it's going to limit the potential how much you can borrow. Because,
right,
I mean, one thing I should have mentioned, but didn't, but it's a good point off of what you're asking is, lenders have guidelines, and that's what they are. They are guidelines. They're not like amendments to the Constitution or anything like that. I mean, you can work with lenders if one thing, I mean, if your like debt to income ratio is a little high, because as you said, you co-sign your kids' student loans. I mean, like a lot of us have. But you have a really good credit score and you're making a decent down payment. I mean, those are what they call compensating factors. And you can generally work with a lender to make it happen on that. I mean, so that's the thing. So if you sometimes get a lukewarm or even decline on a particular thing, there's no harm in asking, well, is there anything I can do to turn a no into a yes?
right.
Like, do I have to put more money on, or do I have to wait a little bit and kind of clean up my credit and see my score go up and things like that? But that was a very helpful question. Yes, ma'am?
Do you have to be a member of the credit union to secure a mortgage through the credit union?
You do, but all that is you have to open an account for $5. Anybody who lives and works in Suffolk, Norfolk, or Middlesex County is eligible. It's not, we started out as city employees, like I say, 100 and whatever years ago, but you do have to, but you can start the process and then join the credit union. I mean, it's not like we won't start the process because you haven't opened your $5 account yet.
Do you have to be a member for a certain amount of time before you can go ahead and apply?
No, absolutely not. Once you're a member, yeah, you can apply for a loan on the very next day.
Okay. I have a question for both.
Oh,
Does the agent write the offer or the attorney writes the offer?
So in Massachusetts, the agent will write the offer. Occasionally, I did receive an offer on one of my listings this past weekend. The client had their attorney write the offer. And then in different states, sometimes offers and purchase and sale agreements, which Katie will get into a little bit more, they almost blend together in a sense, like New Hampshire and Rhode Island are two states that are a little different than Massachusetts. But for the most part, I would say, yeah, the agent will write it and they'll walk you through and you guys can go step by step through every clause. I know Katie's going to review. And I believe in your packet, you might have an example of an offer.
I haven't handed them out, but I can pass them out and I can give them to you too, for everybody that's
Sure.
trying to.
I have another question.
yes.
So when you're securing a mortgage,
Right.
what if I'm a member and I want to buy a home in Rhode Island where I'm not a resident?
Okay.
And you guys are not located in Rhode Island?
We are eligible, we are allowed to lend in Rhode Island. So as I say, depending on if you're looking to move to Rhode Island as your primary residence is one thing. If you're looking at it as a second home or an investment, we could still do it, but there'd be different terms and conditions based on the transaction. But like I say, recently, in the past, we had this quirky rule of Massachusetts that we can lend anywhere in Massachusetts or 100 miles from our home office, which pretty much covered all of Rhode Island anyway. There's been some change to that now. I mean, but technically we can go beyond that.
Any other questions? All right, hi, I'm Katie Frazier. I'm a residential real estate attorney with Dalton and Feingold. We have an office on High Street in Boston, and we're also located in Andover, Waltham, Marlborough, and Nashua, New Hampshire. We cover all of Massachusetts, New Hampshire, Rhode Island. So just to start off, attorneys are required for every closing in Massachusetts. We're required to close any purchase. So who are the attorneys involved? There's potentially in Massachusetts up to 3 different attorneys that are involved in a transaction. There's a seller attorney, a buyer attorney, and then lender representation. Massachusetts also allows for the buyer and attorney and the lender attorney to be the same person, because our concerns are very much aligned, and then for that buyer representation, it just goes a little bit farther to protect our buyer during the process. So we're actually able to do both. And I just want to say, I know I'm not going to be the most interesting out of the group, but I just want to reaffirm, because I come into the process once you have an accepted offer is typically when I'm involved. So right now I'm seeing what all of the accepted offers look like. And I have to say it is now never, more important time to get a great real estate agent involved like Tegan, and as she described, to really vet your real estate agent and to get a really great lender behind you, because it's taking creative writing and really knowing the market and knowing what the seller is looking for and knowing the questions to ask of your seller to get those offers accepted, and to have a lender that's backing you that the seller has confidence in. So having a good name like this, like City of Boston Credit Union behind you, it helps getting to that next step. We were mentioning before contingency. So I just want to kind of walk through what the process looks like. Once you have your accepted offer, there are potentially 2 contingencies that are 2 main contingencies. There's potential for more. And when I say contingency, what does that mean? That means options for you to move forward with the deal or to get out and preserve the deposits that you're putting down. So at the time of offer, you're typically putting down 1 deposit. And then the next step after that is to enter into what's called a purchase and sale agreement. And at that point, you're putting down a second. So how do we protect the money that you're putting down in this process in case you decide you don't want to move forward? After the offer has been accepted, if you have an inspection contingency in your accepted offer, that means you have the opportunity to go into the property with the home inspector and inspect it. If you are not satisfied with what you've seen, and if the seller is not willing to make any concessions, so they can either come down on price, provide you a closing cost credit, or repair and fix whatever item it is that you found. If they're not willing to do any of those items and you don't want to move forward, you say within the time frame of your offer, say that you don't want to move forward, and that preserves that initial deposit that you put down, so it's returned to you. The second biggest contingency is your mortgage financing contingency. And what that means again is this always falls after your purchase and sale agreement is signed. You have a mortgage contingency date in that purchase and sale agreement. And you're saying to the seller, I will have a financing commitment from my lender by this date. And that date is important because if you're not able to get that contingency or the financing commitment from your lender by that date, you have to notify the seller or ask for an extension, because that again is what's preserving that larger deposit that you're putting down at the time of purchase and sale. And what does a financing commitment look like? That's typically a letter from your lender saying, hey, these items are still needed. It can be the appraisal, which is really outside of your control. It's a third party that is doing that. Or it can be things like, well, we need to see a bank statement. We still need your W-2. We need your employer to verify something. So if any information is still needed, then we say to the seller, all right, we just need a little bit more time. We just need the appraisal to be done, or we just need X, Y, and Z in a timeline. And typically, depending on the seller and the situation, we can get an extension. And we can extend, and then if you still aren't able to get what you need, you can always back out and say, as long as you're doing it within this time constraint. So that's why contingencies are important. What we're seeing in this market is sellers are asking for, this was mentioned at the beginning, a clean offer. And I'm sure Tegan has heard and said that quite a bit in the last year. But what does a clean offer mean? That means sellers are asking for no contingencies. They don't want the home inspection. They'd like, wouldn't we all like a cash deal? That's what they're saying. So what are your options? Do you have ways around that? And definitely, there's ways to negotiate this. And I know this is again why it's so important to have a good agent with you and to get your lender involved early, because you need to have these conversations before you find that house that you really like, because the market moves so quickly that you don't want to be put in a position where you found the house and you have to have offers submitted by the next, morning by 9 o'clock, and then you're waiving things. And so this is the time to have those conversations ahead of time. So if it comes up, you know what it means, and you feel comfortable making the decision. So are there ways around doing home inspections? There can be. If the seller is saying no to home inspections, there are certain home inspectors that will come with you when you go to view the house. That will do a discounted rate, but will walk through, and it's not as intensive as a real home inspection, but they're able to give you warning signs and things to look at. You would have to discuss with your agent about how that needs to be disclosed to the seller. But that is one option. And I have seen sellers that have been more agreeable to someone doing an inspection before offers are being submitted, because that way they haven't started the deal. They are taking the property off the market, and then they have to put it back on because you aren't happy with what you found. So there are ways around, and these are questions to ask your agent, to ask a home inspector what they offer. As far as the mortgage commitment, that's one that this is a good long conversation that you have to have with your lender. You have to talk about what your ability is financially and what your limits are, and you have to work within those limits. And questions you can ask are, okay, well, we found a property for this amount. Is it possible some people are asking for appraisal to be waived, appraisal language. And what does that mean? That means if the property doesn't appraise at what put your purchase price in, you'd have to make up the difference in cash. And can you do that? And so this is a conversation to have with, go ahead.
What if it's lower than the appraisal?
If the purchase price comes in, then we celebrate because you just got a great deal. Because that is instant equity in your house. And I just had one today, and it's like the best news I get to give buyers, because it's in this crazy market. I get to say it came in 10 over, and then we celebrate, because that means you're purchasing your house, you automatically have an additional 10 in equity that you didn't plan on having. So we like to hear that. What we don't like to hear is if it comes in the other way around. Some buyers are doing things like, we'll pay up a difference up to $5,000 above the appraisal, or $10,000. But those are things that you can't guess at. Those are real conversations that you have to have with your agent, and you have to have with your lender about what your abilities are in this process. So once you have your accepted offer, the next step is to enter into what I've been talking about, is the purchase and sale agreement. And that's where your attorney comes into play. And what the goal of the purchase and sale is to take everything that's outlined in your accepted offer, plus any negotiations after inspection, and to put it into a more comprehensive agreement. So it's going to state the purchase price, the deposits, your timeline to close, all items that are going to be left in the property, because we want to make sure if they said they're leaving the washer and dryer, I want it in writing they're leaving the washer and dryer, and things like that. So and it's also going to take into consideration the title. We want to make sure that the seller is passing good, clean title to you. There's no liens on the property. The taxes have been paid. If those items haven't been, they're being paid from the seller proceeds at the time of closing. So there's and we want to make sure that there's no easements that you aren't aware of. So an easement could be someone's right to use your driveway, things like that. So you want to make sure that you're aware of the property, the property's history, and that it's good, clean title when you take ownership. The purchase and sale, once that's signed, then you send that over to your lender, and that triggers the process on their end. So they order the appraisal to be done. They send to my office what's called a title order. I go back 50 years. I make sure that there's good, clean title. If something should come up on that title exam, I either work with the seller or their attorney to make sure it's cleared before the closing, and that we have any payoffs that are needed for closing. And let me make sure I'm not missing anything on purchase and sale. No. And also there's one step more. So if you're dealing with a single family versus a condo has a few extra steps too. We're also going to make sure that all the condo association dues have been paid. And to go back a little bit, if you're purchasing a condo, you're also going to want to review what they call the condo docs. And that typically includes the master deed, the declaration of trust, the condo association budget, and we want to know those rules and regulations. You want to see the budget because you want to make sure that's a healthy condo association. If you move in and then find out that they decide they want to repair all the doors, but they don't necessarily have a reserve, that means your association dues are going to go up. So you want to make sure you know what you're buying into when you're purchasing a condo because you're buying into that association as well. You want to see the rules and regulations. You want to know, okay, well, we plan to be in this house for 5 years, but would love the opportunity to rent it out after that. Are there rules that limit that in your condo association? We're seeing a lot of short-term rental, like prevention of Airbnbs is really what we're seeing a lot of, but you want to know what that is before you purchase. Another big one that I get asked about is dogs, because we'll see limits to dog size, and you want to know that right away as well. So what their pet rules are. But that should all be done prior to the purchase. Yep.
Who pays for the appraisal, the buyer or the seller?
The buyer pays for the appraisal. Yeah.
Yep.
No, this is good. That's why we're
We
here.
like this.
Do you have to have a city inspector to come and inspect the home, or you hire someone that is an inspector to come and inspect the home?
That's a great question. You hire someone. So you have the choice. Yep. So the only time the city actually comes in is on the seller's side to do, well, not the only time, but the majority of the time, if it's not new construction, they're coming in to do checks for the smoke detectors and carbon monoxide detectors. The seller has to provide a certificate at closing for those. But for your home inspection purposes, it's an independent company that you hire to come in. And then you own that report when it comes in. And that's what you use. You use that report for your negotiation if there's anything that you found. And it's typically supposed to be something that wasn't apparent at your walkthrough when you first saw the property. So if you saw that it was like an old heating system, that's not necessarily something that you're gonna get because you put your offer in knowing that. But if you find that there's water damage in the basement upon inspection, that's something to discuss, things like that. All right.
Everybody else has these questions, they're just a little nervous. They're so happy that you're asking questions. Keep it up.
Okay.
This is what we like.
I'm sorry, it's for,
Okay.
Bob.
yes. So you apply for a mortgage, you get it because of your credit or whatever the case is, your credit score. Is there someone in the credit union that will work with you to build that back up so you can go ahead and purchase the loan that you want?
What we do, we can put you in touch, depending on the nature of the situation. I mean, well, this is why it was denied, this, that, and the other thing. Generally, we can kind of discuss your credit report, like, you know, if you fix this one particular thing, this is the one that's really dragging it. We also, there are credit counseling agencies out there that we can give you the resources to, that if it's a longer term fix that you might need, somebody might need to deal with, and put you in touch with them. Sometimes it's minor stuff, sometimes it does take a little more time and effort on the borrower's part to get where they need to be.
Generally, we suggest that you do a qualification prior to, so you kind of know what you're in for, and work on that credit. And a lot of times realtors like to see that as well, so that you've done a little bit of due diligence.
So,
Yes.
When I started looking to buy a house, COVID came in and knocked everything out. So a whole year, I've not been working for a whole year. Now I'm in the process to purchase a home, but I'm not working. How would it affect my ability to get a home? Or should I started working in another 2 weeks. Should I wait for that? Start to work first and within a month to get some W-2 forms or?
Well, you can approach it in a couple of ways. If you're resuming like a long-standing career that you were doing, and it just got shut, like a lot of people were in like the hospitality industry, they got devastated, and then they went back to doing the same basic kind of career path and all that. That type of thing can be working. If somebody just decided to start a new one, they have to change careers, then they might need to take a little time and sort of build up a little work experience in their new career. So it's sort of an individual thing, but as they say, it never hurts to start now. I mean, and
it's going to be the same job career.
Right.
Industry.
Right. You may go from one company to another. Let's say somebody is like an electrician and they went from one company to another one, but they were shut down because people weren't letting people into their houses to work on the wires for a year, kind of thing. I mean, a lot of lenders will look at that and they can kind of see that's kind of like not a black mark on anybody. That was just the world we were living in.
To add to that same, have enough money to put a deposit down on the home, and let's say I have my savings to provide 8 months worth of money to pay off until I start working. How would that work?
Well, it's, as they say, I mean, when you're budgeting to buy a house, you have to figure out a couple things. You gotta figure what do you feel comfortable with the down payment, and then you gotta figure out, I mean, closing costs, which could be another like $5,000 on top of that. And then you might want to think of a couple months reserves. So if you have an idea that your mortgage payment's gonna run you like, say, like $1,500 a month. So like 3 months reserves is like another $4,500. I mean, you can kind of start, and this is imprecise, but you kind of start with a number. And I always say, when you start in the mortgage, let's just say you're renting, you're paying $1,200 a month, and you figure out your mortgage payment is going to be $2,000 a month. That's like an $800 a month difference. Start trying to save that $800 a month, because you're going to have to be making that payment. Treat the savings almost like an expense. And when you buy your house, you won't get hit with what they call payment shock, when all of a sudden you got to pay an extra $800 a month. But you also find you're going to build up the funds you're going to need that much quicker. I mean,
And one thing to just add on to that, I think when I talk to a lot of clients of mine, when talking about the mortgage payment, don't forget about taxes and insurance. And that's part of what I think that $800 difference tends to be, is pay attention when you're looking at your houses for the taxes in that town, because that can add on, depending on where you're looking, a lot to that monthly payment. So you'll be paying the principal and interest on your mortgage, and then on top of that, it's going to be property taxes and then your homeowner's insurance. So just make sure you know what those numbers look like and understand that that's part of that monthly payment. So it helps a little bit with the sticker shock when you walk into a town knowing, all right, automatically you're going to be paying X amount a month in this town for taxes. It just helps a little bit knowing, and it helps you know your limit, because this is a market where people will, you're in the 11th hour, and I think Coleman knows this from experience, and they're budging you to go up on your offer because there's competitors. Know what you can do. You have to be realistic, because you want this to be a great financial investment for you. And I'll keep it short. I won't go too much longer, but just to kind of wrap things up here, the role of the attorney. So I help with the purchase and sale. We go through the title, and then I also help the lender draft all the documents needed for closing. So we help organize the closing package, and we sit and sign with you at the closing.
But will you attend the closing?
I have to. Yep, I have to be there. You have to. I know I feel so bad with COVID that we haven't had agents as much in the closings, and so it's just been me. When you spent the whole time with your agent, I feel bad. I talked to my bosses if we could have confetti drop from the ceiling or something to celebrate, because it's an exciting day. But once you're done signing at my office, and we've received all the funds that we need for closing, we then submit the deed and the mortgage to the Registry of Deeds. And as soon as it's on record at the registry, that's when you become the official homeowner. And then just one last item that I want to touch on, because I don't think a lot of people are aware of it, and this is something that comes up at closing. In Massachusetts, there's something called homestead. There's an automatic homestead protection for the first $125,000 in equity of your home from third-party creditors. That doesn't include the town for taxes or your lender, but any other third party. So if you have credit card issue or your car accident, it keeps third parties from being able to attach to the first $125,000 in equity of your home. But when you file what's called a declaration of homestead, and it's just, don't let anybody charge you to draft one. It's a simple form, that can be filed at the registry. There is a recording fee, but that jumps your protection to $500,000 of protection in the equity of your home from third-party creditors. And it stays on for the life of your ownership, and it's just a great extra protection to have on your property. So it's something to ask if your attorney about, to make sure that it's something that's being filed at the time of your closing, that the homestead will also be filed and recorded with the new deed. All right. Yep.
Yes, I have a question.
I have a question. Sorry.
They found a home, but just haven't secured a mortgage yet. Is there still a way we can just come in and apply for that amount of money, or?
Is it like a friendly deal, like you know the person that's selling, or you want to buy it?
Yes,
And do you know that they're selling?
the city actually owns it.
Oh, I'll take it. I know she had another agent, so she had to run, but we have her contact. Call an agent that you trust, and they'll be able to walk you through that. And like she mentioned, it's really helpful for buyers to know you are not paying for a buyer's agent. So in Massachusetts, the way that works is that there's a listing agreement with the sellers, with their agent. The seller's agent has to share that commission with the buyer's agent. That's how they're paid. So that is coming off the seller side and not yours. So it is always beneficial for you as a buyer to use a buyer's agent and not, I mean, you can also talk with the listing agent as well, because that can be part of strategy for closing. Like they'll work with you if you're willing to work with them, that kind of thing. But just know that you don't have to use the listing agent, that there's an option for you to get your own agent to represent you.
I have a question. Sorry. So my question is, on one of the first slides, it stated that, so bottom line is I own a condo and I've had it since 1999, but I'm looking to buy a single family home. So the question is, would I still be considered a first time home buyer?
Then you can make it off and they'll ask you, I have you been pre-approved.
One moment, we'll get to you on Zoom.
When you
We'll
submit your
submit it
offer, it's being
to everybody
submitted
here.
with the
Just one moment.
Every
Oh,
offer
sorry.
has to be submitted with a pre-approval. And that's why at the beginning when I was saying too, it's good to have a lender that people trust, because that name is on that pre-approval. And we know that there's certain big banks that sellers will look down on because they don't think it'll happen, the way that they want to. So working with a lender that people trust really goes a long way.
Complicated kind of question, but it's about like pre-approval and then like asking prices over asking prices and stuff. So if you're like pre-approved for say like 400,000, you want to look for a house at 200,000, is that like that little cushion when they're like, oh, you're asking like 200,000 over asking? Is that like, you know what I mean? Is that
so if you can be approved for, and I think and this might be a good question for you too, because you can be approved for a certain amount, but to know what it is that you actually want to spend.
There's a negotiating angle to this whole thing, and I run it from time to time. We get generally two types of pre-approval requests. One of them is I call the generic one that I just want to know how much house I can buy, and so there'll be a number. The other one is somebody sees the house and they know what it's around selling, and sometimes I say, well, you can get pre-approved up to 500,000. This is a conversation I'll have with them. I said, I can write the letter for 500,000. You qualify for 500,000. Do you want me to put it for a little over the asking price? And the reason for that, particularly when you get into a more not as heated market, when people used to always say, well, if it's listed for 500, I'll make an ultimate bid of like say 490. And so if it says 500 on it and you end the bid, they know you can get 500. You can afford 500, so they're not going to negotiate down. So, I mean, it is kind of a situation. A lot of times, and if anybody goes into one of these, like particularly like housing lotteries that the city has for affordable housing, a lot of times we have to draft the pre-approval letter to specifically whatever the price of the home they're selling is. And so, like, if it's the way it works is that when the city approves developments, a lot of times as part of approving the development process, they'll tell the developer, you have to set aside, say, 20% of the units for people of modest means at a below market price. And so when you do that, when you do a letter, you have to specifically say you are pre-approved to support a purchase price of, it's often it comes down to like $285,325. And you have to actually go to the dollar amount as part of the city's requirements, but that's how it is. So, I mean, that was an excellent question though.
So if you got approved for 500,000, you see a home for 280. The 500,000, if you write it up as that, and that's what the person wants to take out, can't they use that the difference as the down payment, as the closing cost, as whatever fees that they occur when they have to present at the closing?
That's lenders are kind of governed by this kind of. It's kind of like a head you lose, tails they win kind of thing. Lendable value is defined as the lower of the selling price as in the purchase and sale, or the appraised value. So if you get into a situation where the appraisal came in at 500, but you got into a bidding war and paid 525, we can only start our lending calculation based on 500,000, and that's where the case you may have to come up with the difference somehow. But when the case is, at least on a purchase, when you got the great deal, $10,000 thing, we're going to say it's okay. The appraisal says 510. We're treating it as 500 because that's what the purchase and sale of two disinterested parties negotiating this. So unfortunately, it doesn't work to your advantage. It's just sort of lending practices, industry practices treat it that way.
So I think I'm confused
Okay.
now. So
Yeah.
if you found a home that costs
Right.
280
Right.
and you got approved for 500,000,
Okay, yeah.
the difference of that money, if you wanted to go up to 500,000 and get, you know, apply for the 500,000 that you got approved
But we
for,
couldn't lend on a $280,000 home, 500,000 is what I'm saying.
but can't you use the difference as
It's
fix
just
up
a
the
collateral.
home?
No, it's
No, so-
basically saying
It's-
that
yeah.
you personally, your
Yeah, there's no
finances
co-
can
yeah.
afford that
Yeah.
payment. But if your home value
Yeah.
is less than that, you can only go
Up to what the value of the
Right,
Exactly.
yes.
Okay,
Exactly.
all right.
And you can work with your lender,
Yeah.
like you talked about the closing costs, there are certain things that can roll into the loan. So like, you know, the lawyer fee
Yeah.
and the title search and all that, some lenders will allow you to do that. So you don't have, so you are potentially gonna go above the 280 anyway. But remember, you also have to have some money down. So the 280 is less in theory, because you're putting something down.
And just to keep in mind too, this is an investment. It's a financial investment. So if you are thinking about things like we were talking about with the appraisal, just keep in mind that if you ever go to sell the property, you're already starting a little bit behind because you are willing to pay cash more than what people said it was worth, what the appraisal says it's worth. So you have to keep in mind that this is an investment. And so if you're talking about going above and beyond what the purchase price is, just keep in mind, well, if I go to sell this tomorrow, I'm not gonna get somebody necessarily to do the same thing. So it's just something to keep in mind.
So the way to think about your financial boundaries is remember, it's kind of like a credit card. The credit card saying, I'll give you 25,000 credit. Doesn't mean you should use it, right? Because you're gonna get into trouble because you're gonna spend more than you really have to. That's the same true with a mortgage. When we say you can buy a house up to 500,000, you have to work that backwards to say, what's my monthly payment? Okay, when it snows, do I have to pay a snowplow? Okay, when, you know, in the summertime, how much more is the air conditioner gonna cost? Like all those things. Is it electric heat? Is it oil heat? And then you factor in to get to a point where you're comfortable. And that's where you should know your boundaries. So when when Katie says, you gotta be 100 over ask, you gotta know your boundaries.
Exactly.
Because if your boundary is 50 over ask, then that might not be the house for you. Even though your documents say you can get 500, don't use it because you're gonna get yourself in trouble. Because you don't know if you're looking for a job or your job changes, something in your life changes, and now you're in a backward situation and you're regretting having this house. And you also have to think about, remember, you don't wanna be house rich and life poor.
Exactly.
Because you could have the nicest house, but you can never go anywhere. You just have to live in your house. No, because you can't afford to eat out, you can't afford to go on trips. So you have to balance the two, and that's what's really important. You have to know your financial boundaries.
One question I made, I know you guys are finished, but in terms of the attorney fees that the buyer have to afford, what is the estimate,
It's a great question.
the range?
So if you're using an attorney that is also able to act as the lender's attorney, you can typically pay one fee. And this is the question to ask the attorney when you're interviewing is, are they able to what they say is close the loan on behalf of the lender? Are they able to be the closing attorney? If it's one fee, I would say it depends on the attorney, honestly, what the range is, but I would say to estimate anywhere between 600 to like 900 on that. And when you ask them, it's also, what do your fees include? So are they charging you something separate for drafting the purchase and sale? Or is that included in their fee? Are they charging you things for postage? Is what's called the title exam, is that separate? Because there's a fee for a title exam, which typically runs between $100 and $300. So when you're talking with your attorney, don't just ask what's your fee, ask what it includes. Because then you'll get a better idea of what the total cost will be. And that will be paid as part of your closing costs. So you're not gonna write a separate check to the attorney, but it'll be paid through the closing and it'll be on your closing disclosure with all of the fees. If there is a buyer's attorney that is not closing, that will be typically a separate fee that can run $300 to $500, again, depending on what that attorney is gonna charge for that representation. So a good way to save is to get an attorney that's able to close the loan on behalf of your lender. So you're not paying for 2 attorneys to do that job.
Hi, I have a question.
We have a question on Zoom too.
Okay.
I do want to
Hi.
reiterate to all the folks on Zoom, this contact information here, you have the credit union, Katie and Tegan's as well, and folks in here. If you don't mind, please filling out one of these. That way we can reach out to you and answer any questions. We'll reach out tomorrow. We would be happy to get to everybody, but we know just for the sake of time,
Okay.
we want to get to the most efficient ones. Whoever that is on
Right.
Zoom, would you
Hi.
mind?
Yes, my name is Laurie, and I was inquiring about one of the first slides. It states that so I do own a condo. I've had it since 1999, and I am looking right now into buying a single family home. So would I be considered a first time home buyer since it's been over, I think what it said 2 or 3 years? And my
No.
loan on the condo is conventional.
You purchased the condo?
Yes.
Yeah, then no.
Okay. And that's strictly because it's first time home buyers. But I thought the slide said the first time home buyers, if you haven't had a home over like 2 or 3 years. So what's the difference?
The standard definition of a first-time home buyer is if you haven't owned a primary residence in the last 3 years. So it's not when you bought a residence, it's when you've owned it. So if you still own the condo, you would not be a first-time home buyer.
Okay. All right. Thank you.
Thank you.
She has a question.
Sorry, you've been very patient.
In
regards to down payments, what do you guys still consider like healthy? Because sometimes saving towards like 20% is like, you know what I mean? You think you have money tonight, but it's like not. It's like never you know, and then asking over and this and that. It gets discouraging.
We can go as low as 3% down for first-time home buyers. I mean, normally when you put less than 20% down, it involves private mortgage insurance. However, there are programs out there. Probably the most notable is called One Mortgage, which is available throughout the state, where you can put as low as 3% down and not have to pay the PMI. And so there are certain income restrictions based on your household size and where the property is. So if you're buying a property in Boston, for instance, the income ceiling to qualify under that program is higher than if you were, say, buying down in Bridgewater, for instance. It's based on like government statistics about average incomes. If you're above it, you still can, as I say, you can still put less than 20% down. It involves the private mortgage insurance, and that's an additional charge, and that varies in a couple different factors. Obviously, the percentage down, like if you're putting 10% down, the PMI premium is going to be a lot less than if you put 5% down. But also, and this is one of the things where credit score really gets important, is that the premium rates are also a factor of not only the down payment percentage, but your credit score. So I mean, and it kind of goes like every 20 points, there's a new bracket. So I mean, that's it's just another reason to kind of keep the ducks in a row.
I have a question. So what if you inherited a home that has your name on it, the list of other people? Are you still, and your name is on the deed?
Okay, I recently ran into a situation like that. Though, if you're looking for one of these special programs that we participate in, they will look at that on a case-by-case basis. If you're the one who's residing in the property, they're probably going to call you not a first-time home buyer. If you just basically, it's like parent passes away and leaves it to 5 kids, and maybe one of your siblings is living in it, but you have an equal interest in it, they might approve it on a case-by-case basis. That's kind of that's a very good question, and there's no real cut and dry answer on that. But as I say, I have seen recently where they have made an exception where the party was not in the house, and it's kind of like they really weren't involved in it. It just happened to bequest it to them among other people.
So does the first time homeowners, does it only apply for Massachusetts? What if I have a home in Florida and don't have one in Massachusetts?
No, it's property. If you presently own real property, it doesn't really matter where it is. I mean, if you've owned it within the last 3 years, you're not considered a first-time home buyer. I mean, there are very few, there's a few sort of exceptions. They call it like a displaced homeowner. Like if somebody owned a place and then had to sell that place because of like a divorce or something like that, there's some limited exceptions to that rule that the person was forced to give up their home, and then it's been less than 3 years that you could be considered a first-time home buyer too. Those are kind of rare exceptions.
Nope, I think we're good.
I've given you all my business card. If you have any questions whatsoever, feel free to reach out. If you want to do some pre-qualifications, anything else you need, a copy of the Zoom link, reach out, email me, call me. I'm here.
I brought copies of what an offer looks like and what a purchase and sale looks like, and also just a little flyer about the difference between homeowners insurance and title insurance. So I have a little packet just in case you'd like to pick one up.
And thank you everyone for joining. Once again, this was recorded. We will send this to everybody that asks, and please take down the email addresses here. mortgages@cityofbostoncu.com. We would be happy to answer any questions that come our way, and we'll reach out to you as soon as tomorrow. So please take advantage of the contact information, and we can't thank you enough for joining us. Thank you very much. Thank you. Have a great day. Thank you, guys. Thank you very much. Yeah.
Thank you. Thank you. Thank you.
Attendance and further questions. Yeah. Yeah, if you don't mind.
Yeah, sure thing.
Thank you very much. Thank you for coming.
I would love it. Thank you. Thanks so much.
Absolutely. My card's on if you have any questions.
Great, thank you.